beat 99% of other investors in this market. Now, today I'm having a conference in Lansfield in actual Victoria, and I'm having a conference with other really high-level entrepreneurs. And one of the discussion topics we have is how to get ahead of the market. We're in a lovely vineyard, and I thought I'd just come out and make this video for you because it really got me thinking about how you too can beat 99% of the market and what you need to do to actually beat the 99%. Now, in commercial property, as in property alone, one of the big things you got to think about is getting ahead of the market. Now, when you get ahead of the market, what do you gain out of it? You gain more cash flow, more growth, and it means that you can buy sooner. So overall, more wealth for you in the next 3, 5, 7, or 10 years. It literally compounds itself, which is why it's so important for you to get ahead of the market. One of the key things, though, to get ahead of the market is to ignore the naysayers. Number one thing, ignore the naysayers. Number two things, don't follow the market. If you follow what the economists are saying, the latest tips are saying about, we should all invest in Perth, or we should all invest in Brisbane, or we should all invest around the precinct where the Olympics are coming, we should go to the Gold Coast, we should go to Port Macquarie, all of these things, they're giving you tips where the whole masses are going, right? And why do you tune into this channel? You tune into this channel because my name is Helen Tarrant, and I help everyday Australians become wealthy through commercial property. Now, one of the key things that I do is I pinpoint, because I'm at the forefront of all of the things that I do. Like, I'm doing transactions still on commercial property across Australia. So right now, we've got files in ACT, Adelaide, Melbourne, Queensland, Sydney, regional Queensland. So, and we're exploring areas in Perth for our clients and benchmarking that against Perth, against Brisbane, all sorts of different areas. But the key thing I want to share with you in this video is that how you can get ahead of the market by not listening to the experts, but by charting your own path, so you don't have to worry whether the interest rate goes up or down, where it's most important for you to actually create a strategy that works. Now, number one thing, remember I say ignore the naysayers, because the naysayers are going to say to you, don't buy now because interest rate's too high, you're not going to get the value because, we've already had the exponential capital growth in the last 3 to 5 years, and you're going to buy too high. You're going to see people who are tipping that, the market in Perth has boomed, it's already boomed for the last 2 years, and how you too need to get onto the bandwagon. Well, that's not really what this video is about, but this video is about concrete information, right? And I'm going to give you a couple of tips, 2 tips at the end of this video, so make sure you stay tuned to the end, where I'm going to share with you how you can get started right now and look and find those areas to get ahead of the market. So number one thing that we need to start is, if we ignore the naysayers, ignore the trendsetters, what are we looking at? We're looking at what the market is not doing, right? So we're looking at what the market is not doing. Why is that important? Because if we follow the market, we're going to get the same results. So if, for example, we invest in WA and the market goes up by 10%, we go up by 10%, right? If we invest around the Olympic precinct in Brisbane and everything goes up by 5 or 7% next year, we do too. But I don't want that for you. I want you to rather be in a property where you know it's going to grow the next consistently by 5, 8, 10 or 12% in the next 3, 5 years, so that you can refinance against it and buy again in a short space of time. So what do I look for when I'm looking at those properties and the market trends, when I'm thinking, okay, I want to get ahead of the market? Firstly, I want to see why people are not investing. Now, yes, people are not investing in really small regional areas. People are not investing in remote areas. People are not investing in, CBD office spaces. Maybe I should invest in those. No. I'm not suggesting that. What I'm suggesting is looking at the lack in the market. So what I'm looking at is, for example, a very, very key point is you might find that in areas of Brisbane, right? A lot of people want to invest in that little micro fringe, somewhere around 10 to 15 Ks out of the CBD, out of the airport area, where it's really, really popular. Most people want to invest in warehouse properties, right? Now, that means that you're paying a premium for it and you're getting a low return, right? Most warehouse properties around those areas are trading around 5.5%, which means you're not breaking even, you're being negative. So what I do suggest is potentially looking elsewhere. So there's areas where there's going to be fringe, right? So fringe Brisbane, right? For example, there's areas that are developing along Brisbane all the way to the actual Gold Coast. And so the strip is between Gold Coast and Brisbane. There's lots of inland areas where people are not looking and not investing because it's not the hot areas, right? But it's always the on-flowing effect. So one of the key things that I did was, when I went and charted the Great Ocean Road, one of the big things that I looked at was, okay, so there is, Geelong, which has boomed to about 4%, right? 4% net return, which means the property value doubled within a 4-year period. Then I went through and go, okay, well, let's look at Torquay, which is the next suburb along. Then let's look at Port Fairy. Then let's look at, Warrnambool. Let's look at Portland. All along the areas, I tracked along the areas to look at where that growth what's happening and what is the next spillover suburb. So that's a real key for you. If you're looking at Brisbane, potentially looking at Ipswich, the flow onto Toowoomba. If you're looking at Melbourne, potentially that strip from Melbourne to Sydney, that area has lots and lots of different things that are going on, especially some inland regional areas which are still large enough, still developing, and still giving you a really good return. So that's one of the things to go against the trend. So the trend might be going one way, you need to go the other way. So that's one of the things to look at. Number two, obviously, if we ignore the naysayers about what are we looking at, the next thing that we're looking at is what is the class of property that most people are not investing in. Everyone is investing in industrial, right? Everyone's investing in industrial. Well, now, should you invest in industrial? Sure, if you want to pay the premium and get the lower return. But if you don't want to and you want to actually get ahead of the market and beat 99% of the market, you should be looking elsewhere. There's spaces where you look at, okay, look, maybe the cafe is going to go out of business if it's in retail. But surely the retail with the dentist in it, the retail that has Centrelink in it, the retail that has a brand name tenant, the retail that's on the corner that has a really good, successful, maybe a dessert shop or a mum and dad, the cafe that's been there for 20 years, or iconic institute in the area, maybe a Chinese restaurant that's been there that serves a particular type of food. What is it that makes that property and the tenant lock into that area that makes it so special, right? Look for those key properties, because those key properties in commercial is going to deliver. One of the things is going to deliver stability for you. Number two is going to get you ahead of market, because you can buy it at a much cheaper price than if you were investing in industrial property right now. Number three, you get a solid tenant, a tenant that's going to continuously pay rent, and you know their business is solid and they're not going to go out of business and you're not going to suffer the vacancy. So you get best of both worlds, and then you simply sit back, wait for the market to turn, and when eventually warehouses fall off a cliff and warehouses go, people go, look, it's just too expensive for us to buy it. They're going to come back, and they're probably going to start with retail before they go to the office space sector, because it swings and roundabouts. Like the property clock in commercial is like the favorite of the month, right? So when you look at that, that's what you're looking at, is what is the favorite of the month? Should you be investing that's counterintuitive to the market to get you ahead of the market, right? So that's number two. So those are the two really good tips to look at. So look at where other people aren't investing in, but the demographics are still going, where you get a lot of influx of residential tenants, residential people moving into the area. So one of the classic things I like to talk about is Hervey Bay. Now, Hervey Bay was pretty much an old sleepy town before COVID. It was underperforming, right? It wasn't performing very well. It was pretty much government services, older people. That was it, right? But with COVID happening, the younger people on the Gold Coast, people around Fraser Island, people in Bundy moved to Hervey, became a lifestyle city, became an area great to raise kids, lots of house and land development, lots of new industries coming. All of a sudden, the area has boomed. Now, most people would have not known about the area. Most people would have ignored the area because they saw it once, they dismissed it, but didn't check back and didn't revisit that area. So this is the tip that I'm giving you now. When I remember how I said at the beginning, I'm going to give you a couple of tips. Number one tip is to go back and revisit those areas, right? Where you might have looked at it 2, 3, 4 years ago and they were underperforming. They could be booming right now. And this is one of the things that I do here at Unikorn, is that I help everyday Australians become wealthy through commercial property. And one of the key things that we do is revisit areas, right? So I'm an educator, I'm an author, and a specialist buyer's agent in the commercial property space. And one of the big things that I do and that I can help people at is to go back and revisit areas. So areas that previously was underperforming could have had a linchpin, could have had something that developed in there. It could have been a private hospital, could have had a big developer come through, it could have had international money coming to the area, and all of a sudden, within a space of 2 to 3 years, that area has now boomed, and that is what you are looking for, right? So sometimes it's not about discovering a new area, but revisiting some of the old areas. So that's number one tip. Number two is to really, when you consider commercial property, is value. Now, nothing beats value, right? Buying 300 versus 500, buying 300 versus 800. Most people think, if I'm buying $1 million, can I split this up? Should I buy, two smaller ones? Look at value. Ultimately, value holds, right? Value holds. So no matter where you're going, you're looking at the value of the actual property. So does it hold value on its own, right? Because if it does, then longevity-wise, you are always going to gain out of that property, right? And that's what I want you to do, is always find properties that will gain in value. And that's how you beat the market, is that it gains in value while you can sit back, take the cash flow, and let the property actually pay for itself while you are holding it. And that becomes really, really important. So that's a really number two key areas. Now, if this video has been really startling for you, has really got you thinking, and started to make you think that perhaps there's other more important or smarter investments out there other than residential or crypto or businesses, and you really need cash flow and growth, then reach out to us. HelenTarrant.com, Unikorn.com. There's a link below where you can check out our community, where we have one of the largest communities in Australia of commercial property investors. We really specialize in helping everyday Australians get into the commercial property space, but building true wealth through having cash flow growth and ultimately uplift so that you can continue to buy, and not developing out buying 10, 12, 15 properties, but really good 3 to 4 properties where it's manageable and you can retire on good passive income. Now, remember my 2 key points, right? Now, the first 2 key points is ignore the naysayers, because there's never a right time to buy. You invest in property when it is the right deal. And in commercial property, the right deal comes along, maybe not for you, but for someone in the community, in the space, every week, right? But if you know your strategy, you know when a good deal comes up, so you can nab the good deals and you can move fast. And speed gets you a better deal and helps you beat the market, right? Number 2, look at what the market is not investing in, and do your research and invest in things that your market is not investing in, so that you can get the exponential gains in the next 24 months. So markets are in a key area, key location. There's plenty of other locations where it's going to be a really great area to invest in with the right type of properties, but you just got to know. And sometimes that requires you revisiting a location. So that's a key takeaway, right? My 2 takeaways are: make sure you do not just dismiss something because you have a preconception. Make sure you really do check it out, right? Because sometimes it takes a revisit to know the area has now come a long way and it's the right time to invest, right? For example, I put a lot of our clients into areas of Maitland in New South Wales right before the hospital broke ground, because I know after that there's a lot of rezoning going on, and when that rezoning has happened, that has created exponential wealth for them. Now, the same happens when we're looking at areas, for example, Sunshine Coast. We're in there 7 to 8%, and then we've pulled out of there where the market has dropped and the property value has doubled because we moved those clients to another area. So that's one of the benefits of being surrounded by a mentor and a community of people who know what they're doing in the commercial space, but who does it every single day. But that's the number 1 takeaway. Number 2 takeaway is about understanding you, your risk, and be able to progress forward on a plan, right? Because if you beat the market, you've got to look at what other people aren't looking at, but you also got to execute your own plan. So it doesn't matter if the interest rate's at 6, 7, 10%, there's still areas, there's still demands for commercial property where other investment strategies are lagging behind, because commercial property is about supply and demand. It's not about, what's in fashion today, but sometimes picking up properties where other people are ignoring or not investing and waiting out your time can be the best investment strategy out there. Now, if you like this video, please click the bell, subscribe, share it with your friends, because it's really important that we spread the word on how fast you can retire through commercial property. Now, if you found this interesting and you really want to get ahead, there's a link below where you can click to book in for a strategy session, and it's obligation free, and we're going to be able to help you to work through how commercial property really applies to you. And that's really key to getting your blueprint, working through the profiles and getting started, right? And number 2, if you're still investigating and seeing if commercial property is right for you, check out our wonderful community of commercial property investors. Join in one of our webinars, join the conversation about how to invest in commercial property, how to find the best locations, and really that's going to support you through your journey. So don't forget to subscribe, share, and also click the link and book in for your strategy session.